You know what time it is, folks? It's time for 3 at 3. Uh, in our 3 at 3, we try to bring you what's going on in the markets so that you guys can, so that you can basically see what's going on, what we're seeing as unusual activity, and perhaps share it with a friend. Or maybe you want to learn more about what's going on in the market from us. Who knows? Anyway, let's dive in to the presentation. All right. So, 3 at 3 disclaimer is that these services are for educational and informational services only. This is not to be investment advice for you. So, even as I'm checking my trades, I would say, folks, make sure that you understand the risks that you take before you make them. Every investment has some form of risk. Just make sure you understand it before, rather than, maybe waiting a little too long and then saying, I don't know how to manage this iron condor or this butterfly or whatever it is. Learn about it before you trade it. Keep them simple. That's another bit of, not advice, but educational material that I'll offer. All right. If you want to learn more about Market Rebellion, you can go to marketrebellion.com. If you'd like more about unusual option activity, then go to marketrebellion.com/UOA. That's marketrebellion.com/unusual option activity, or UOA. All right, that said, let's dive in. This one you saw if you were with us just a couple days ago, because on the 5th, which was 2 days ago, Cinco de Mayo, we saw unusual activity in Peloton with the stock at 36. And as you may have heard on the halftime report today, Josh Brown, Reform Broker, and I both own this one happily, bang, and I've owned it from basically this level, from right around 36. And they had a good day yesterday. They had a great day today. So let's look at that. They were buying the May 3750 calls, which I detailed that they were buying. And what did we do? Well, we jumped in and bought them, and that's what the stock chart looks like, folks. It trades to 43.50, a little bit higher than that even today. And what is that 14% jump? Well, since we were buying them at 36, this is $7.50 higher. So if you bought the stock, you made $7.50 owning the stock. And so 1,000 shares of Peloton would have been $36,000. Again, I'm confident most of you can do that math, 1,000 times 36. On the other hand, a 10 lot, which controls 1,000 shares of Peloton at 37.50, because those were the calls I bought. 37.50 is the strike price of those calls. If you were to buy those calls, and let's say that you spent $2 and what was that, folks? $2.50. That's $250 per option. So on the one hand, you've got a $36,000 investment, and on the other hand, you've got a $250 investment times 10, because every option's for 100 shares of stock. So 10 options would be 1,000 shares of stock. So as you know now, that call has gone from $2.50. It would be worth a lot more with the stock at 43.50. In fact, it went all the way up over $8 today, traded on the day to a high of $8.69. You see the little arrow there on the side of the screen. Now, I did not exit my remaining calls at $8.69, but I offer it as a sign that if you miss a little, you miss a lot. This was a fantastic trade. And as I've said, again, with Josh Brown, my friend, and Scott Wapner, also my friend, I discussed this is one of the stocks that, like Netflix and like Zoom and a host of others, has direct positive impact from COVID-19 in terms of how the company will do. Because a lot of us don't want to go to a gym. I, by the way, would like to go to a gym, even if it meant wearing gloves. But I can't go to a gym. My gyms are closed. Both gyms that I go to closed, at least for now. Maybe they'll open up. But for a lot of people that want to stay in shape, they go to a Peloton at home. And that means that they unbox the bike and they jump on there with the big, 24-inch screen, and they're riding along with their friends or with other people, strangers, and they're competing with them, and they're staying in shape. They also do that with mirrors. They have something that's like a mirror that hangs on the wall that you can join classes, yoga, stretching, and the like. You can also do a treadmill, which is becoming extremely popular. And as I pointed out, they added, I believe, 1 million digital accounts. Now, these accounts, folks, pay them money every month just to be part of these classes, even if they don't have a Peloton bike or treadmill or mirror. So that's reoccurring revenue, which is one of the things that I love. And secondly, this is why I think the outreach of this company has become so broad, that it is not just, your hyper in shape friends that are triathletes and things like that. It's mom and dad trying to stay in shape. It's all of us that can't get into gyms. It's all of us that need to go and stretch and all the rest, and would like somebody qualified to show us as we're doing it. Anyway, you get the idea. So again, if you bought 1,000 shares of Peloton at 36, that $36,000 investment yielded you from 36 up to 43, $7.50. You made $7,500. It's a great trade. On the other hand, if you invested in the options, that $250 or $2.50 per option right now is $6.20, traded as high as $8.69. Let's say you got out at $7.50. How about that? That's a triple. That would mean you turned a $2,500 investment into $7,500. Again, $7.50 times 100 shares would mean $750 per option on a 10 lot. That's $7,500. So let's see, could have made $7,500 buying the stock and having $36,000 invested, or for $2,500, you made 3 times your money and have $7,500. All right, that, my friends, is why you trade options. So now let's go on to the next one. Another fill coming in. Bang, love that. All right, next one. Let's take a look at some fresh meat, shall we? FireEye. As you can see, and as I told Scott, my final trade of the day, we didn't get to do unusual option activity or UOA on the halftime today. It's not Scott's fault. It's nobody's fault. We had brilliant friends on the program, like Mark Lazary, like Tom Lee. We had a lot of really smart folks on the panel as well. Brenda Vingello, Joe Terranova, Josh. It was a good show. And so sometimes we run over and we don't have time to cover unusual option activity. That's why I share it with you here. So take a look at FireEye. They were buying the May 11 calls for 33 cents up to 55 cents. Again, if you're new, that means $33 because you got to move that decimal place 2 over because every option's for 100 shares of stock. So from $33 to $55, somewhere in that range is what people paid. I am in these calls. Stock was $10.85. Now the stock is $11.58 or $11.62, it looks like, even on the side of that graph there. In other words, it's been moving up all day, FireEye has, and these calls have increased in value. God bless them. So I'm not going to tell you what to do, folks. If these calls double, which they are doing right now, what I do is I pull half of the money off the table. Now, some of you are saying, well, why? Why do you do that, Doc? Because I want to be as disciplined with taking profits, folks, as I am with cutting losses. I do have losses every single day. Why do I have losses? Because I'm dumb? Maybe. But also because I trade a lot, which means the more lines you have in the water at a given time, the more potential hits you're going to have on the positive side and potentially on the downside. Now, our readings for unusual option activity run way north of 70%. We believe they're more like 77, 78% of the time we are correct. But I want to cut my losses when I'm wrong, and I want to let my winners run. But when that option goes from where it is, 55 cents, for instance, let's say, to, I don't know, let's say $1.10, I want to pull some money off the table. So FEYE, FireEye, looking right now to see where these calls are, to see if I got filled on this. As you see, May 11 calls, they were 55 cents. Where are those May 11 calls? Is regular May expiration, folks. So that's next Friday, not this Friday, not tomorrow. Next Friday, those 11 calls are trading for 92 cents right now. On the day, they've traded for a high of, screen's fading on me here. Traded on the high, 98 cents. So they haven't quite doubled. Nonetheless, I took off some at 95 cents today. Why? That's not a double, John. Doesn't have to be a hard and fast rule. Moves quick. I take off half. I put it in my pocket. I let the rest go. If we keep going to the upside, then I say, just like I did in Peloton, boy, am I dumb. I sold some. On the other hand, if I pull some off and then all of a sudden it starts pulling back, I'm going to feel pretty smart and I'm going to exit the balance. That's my discipline. And that's the first of our 3 at 3. Let's go to trade number 2. Trade number 2 is Pinterest, PINS. Now, we had a nice trade leading into things before things fell apart, and we took profits. Now we're getting another reading today in the morning with the stock at 18 bucks. Pinterest, May 1850 calls. So information that is embedded in this trade is, number 1, just over a week before they expire. Number 2, just out of the money, 50 cents higher than where the stock is trading. What did they pay? 50 cents, which is $50, because every option is for 100 shares of stock, up to 74 cents, which means $74 per option. So if I wanted to buy a 10 lot and control 1,000 shares, I could do that for $740. On the cheap side, I could do it for $500 versus putting $18,000 on the line to buy 1,000 shares of stock. Why do you think I trade the way I do, folks? Because I understand options, and I would rather have 500 to 700 bucks on the line rather than 18,000. Let's see how it's done. Well, it's up to 1872. So from 1802, it's up 70 cents so far, folks. Pinterest is. So these calls, boop, 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 moving to the upside as well, and they expire next Friday at the 1850 level. And guess what? They're 21 cents in the money right now. Bang! Let's get our third of our 3 at 3 right now. Datadog, DDOG, Datadog. So my friend Joe Fahmy, who I've had on the show before with us, he was pinging me saying, Doc, are you seeing the activity in Datadog? Yes, I am, Joe. And yes, it was strong activity. They were buying the May 60 calls for 10 cents, and they paid up to 30 cents. So what is that? $10 up to $30 for these calls, every one of those calls. So a 10 lot would cost me 30 bucks versus 48,000 to buy 1,000 shares of stock. How's it done? Oh, I don't know. Rather well. It hit $50, which means $2 higher than where we were trading them when we entered this trade. And those calls, the right to buy it at 60, have moved up, but they're still $10 out of the money, folks. So do you bet that the stock goes and explodes to the upside? Well, you certainly can, or you could buy the 50s and sell the 55s. In fact, let me see, because that's what I have on. Let me see where Datadog is right now as far as those calls. DDOG. Datadog. with the stock just shy of 50. Those options that expire next Friday at the 50 strike have moved up to, from when we entered them at $2.40, they're now $3.55. So they're already up $1.15 from where we bought them. The 55s, which we sold, give you those in one sec. So those May 55 calls are moving up as well. They are right now, we sold them at $1.25, they're $1.80. So we're out, what is that, 55 cents on that one, and we're up $1.15 on the other. And we're into a spread that can go to $5. I like my odds of that rather than asking the stock to run to 60. So that's the way I'm trading Datadog, and the way I'm trading all three stocks that I mentioned at our three at three rather. Now, by the way, I promised my friend, business partner, Mark Lopresti, I'd mention this, and the people at Money Show. He and I are doing a How the Smart Money Uses Alternative Data next week, Tuesday. We're going to do it May 12th, 11:20 a.m. Central Time until 11:50. So that's leading into the halftime report right there, folks, because I'll be on the halftime report that day. So we will be talking about how we use alternative data to find trades like the kind I've detailed for you guys here. Alternative data is the way big hedge funds are trading right now. You want to check that out? Go to moneyshow.com and sign up. It is free. You can attend for free. You'll see it online. And my business partner, Mark Lopresti, will be joining me on there because he is the co-founder of BattleFin. And BattleFin is an alternative data purveyor. They basically bring together 600 different data purveyors and put it all on one platform so people can look at it and see which one might be appropriate for them. Now, for most of you, you're not going to pay the thousands of dollars a month that it costs to get any one of these alternative data. That's why you want to attend this event, because we are going to be selling a subscription, not at this event, but we're going to be selling a subscription based on unusual activity and alternative data. And you'll want to see more about that, trust me. So that is, again, May 12th. That's Tuesday next week. I'll be on with Mark Lopresti, 11:20 to 11:50, half an hour event. You want to see it virtually? Free. Join us. If you have any questions about anything I've mentioned, you can find out more. marketrebellion.com/UOA. That's marketrebellion.com/unusual option activity or UOA. Folks, I thank you for joining me. I hope you had a little insight into what's going on in alternative data, in unusual option activity. And I hope you join me tomorrow, because Friday already. Friday tomorrow, folks. I hope wherever you are, you're staying safe, and I'll see you tomorrow. Thank you for joining me here today. Thank you.